I will show you the trading strategy that I have used for over 30 years. Probably the best trading strategy ever. A strategy that will make you profitable in the markets and actually give you an edge in the markets and take you to the next level. For those of you who don't know me, I'm Rob. And for those of you who do know me, welcome back. Today, I'm going to show you the best trading strategy, the best trading system that was probably ever invented for traders. And the reason it's so good is because it's so simple and so easy to use. There's so many complicated systems available to you out there, so many systems that will tell you you can make $1 million in a week, $1 million in a day. You can invest $100 and turn it into an absolute fortune and make you think that the stock market is somehow some kind of casino. And guess what? Really, guys, the casinos are casinos. The stock market, it's two totally different things. The sooner you understand that trading is actually a career and something that you have to understand, something that you have to approach differently, and something that you have to learn to become profitable, the sooner you will become a profitable trader. Becoming a profitable trader is not difficult. Trading the systems is not difficult. You can go and do any course on the stock market that you like, and they'll all give you a good system. They'll all give you a system that you can understand and that you'll be able to use. But the minute you put real money in the market, that's when it becomes a little bit tricky. That's when it becomes a little bit difficult. I'm going to show you the charts and I'm going to show you the system that we use to trade with. But that's not what's going to make you the money in the market. What's going to make you the money in the market at the end of the day is you and your psychology. So after we've been to the charts, then we'll discuss the business plan, which is a simple two-step business plan. You don't have to write anything down. It's all there for you. It's all in your head. And I'm just going to show you how you can approach your trading and how you can psychologically approach your trading so that you can become a profitable trader rather than a losing trader. Because 80% of traders lose money in the stock market. And if you don't like losing money and you don't like risk, you most probably shouldn't be trading. Then this game is not for you. Guys, while you're here, drop down to the description, get your free Forex book. There is a free Forex book for you there, and just download it. It's a PDF. Don't worry about it. And if you're looking for trade of the day every day, then you've got to join the membership, which is on YouTube. It's a button below the video here. Let's go to the charts and let's go and have a look at a system that'll make you a profitable trader if you approach it with the right psychology. And then we'll talk about what the best business plan is around that particular psychology. Let's go see the charts, guys. It's been a volatile week in the stock markets, and I can tell you, if you didn't keep it simple, it's probably become even more volatile for you and more tricky. You know, if you're trading on the lower time frames, like 5-minute time frames and 1-minute time frames, very, very difficult to trade this volatility, guys. If you get it right, that's great. You get it wrong, that's really, really bad. How do we trade a system that is simple? That's simple price action. It's not that complicated, guys. It's not out of the realms of possibility to trade without squiggly lines, to trade without all the indicators that are used in the markets. Now, I always say there's 3 ways that we trade. One of the ways that we trade is with trend. We follow the trend. If the trend is up and it's bullish, we keep on going long and we keep following the trend long. And then we have counter trade trending when it falls over and it breaks the structure and you want to go short. And that even sometimes fails because you're going against the trend. But normally, if you go against the trend and it's broken structure, you can normally get the short. Now, this week's been a bit volatile with elections and things like that. So this did tend to shoot the other way. But that said, we have been calling the US dollar, Canadian dollar long for quite a while because it's been staying in its trend. That's very important to understand, that the trend is your friend. This R50 has been going down, so it continues to go down. I'll show you where we get these bars and lines and rectangles from in a moment. The Nikkei is in a bullish trend. It's been going up. There's the trend support. Stay long on this trade and it just keeps bouncing off the trend support. You can draw trend lines in. Then you get the trades where you're trading in a range where a price stays in between those 2 bars all the way. There's the daily resistance, there's the daily support, and it just stays in there. So you can trade short off the top and trade long off the bottom. How do we take trades out of these areas? Very simple, guys. What you do if it's coming off the bottom, there's no complicated stories. There's no waiting for the moon to line up with the stars or anything like that. Basically, you just wait for a green bar to come out, close, and then you can go long, or you wait for a red bar to come out, close, and you can go short. If it breaks through these levels, then you normally just wait for it to come back and touch again. We call it a break and retest, and then give you a green bar and go long, or vice versa, red bar and go short. Nothing complicated about that. But how do we get these lines? Quite simple, guys. What you do is you take it to a line chart. Now, the reason we take it to a line chart is pretty simple. Is because on the candle charts, you get tails, which are highs and lows, sellers and buyers coming back into the market. On the line chart, you get the closing price of the day, and I prefer to work with the closing prices because the closing prices are stronger. What I do then is I always take it up to the day chart. Even if I'm trading on the hour or the 4 hour, it doesn't matter. The day chart gives you more reliable levels. Then what you do is you look. The reason we draw it in blocks is because a line will give you an exact area, but this is a line. It's not a wall. It's a line in the sand. Doesn't mean that the price is going to get there and go, ooh, there's a line, let me get out of here. No, it'll normally go into that area. It's an area where we believe there might be a bunch of orders waiting, because there are human beings in the market that are taking orders at this level because they've done it before. It's a probability trade. So the area hits here, it hits here a couple of times, and we know that that is now daily resistance. That's where the price likes to stop and come back. At the bottom here, we know this is a daily support. We know the price likes to come into this area and then go back. And then you just draw your block in off the line, off the bottom line and the bottom line, the bottom points where you feel that will be the support, the top points where you feel those closing prices, where you feel that's where the level is ending. Now you know where your daily resistance is, and you also know where your daily support is. And that's important. You just need to know that. Then you can take it back to the candles and just have a look at what you've got here, which way it's going. Is it bullish? Is it bearish? Now, it was bullish, went into this pattern, probably resolved to the upside somewhere down the line, but it's a probability. Then you take it back to the 4 hour chart and you simply trade in the 4 hour chart. And then what you also do on the 4 hour chart is you simply look for areas where you might find, for example, this is an area of supply, a supply of money, and then you just take that supply of money and you work off that supply of money. And that's as simple as it gets, guys. So now you've had a look at the charts, and now you've had a look at a system that can work for you. Now you've probably gone through a number of systems. You've probably watched a lot of YouTube videos. You've probably watched a lot of traders on YouTube. You've probably paid $1 million for a course, or $1,000 for, I don't know how much you pay for courses, but you've probably paid for a course. What I'm telling you here today is completely free information. It's for you to use or not use. It's totally up to you. I always say, if you go out there and you get a little bit of information from everyone, you can compile it, put it together, and decide for yourself what works and what doesn't work for you. Because at the end of the day in the markets, what you have to understand is you have to find your feet. You have to find what actually works for you, because you can't really carbon copy another trader. You can't really be that trader no matter what you do. So you find someone out there who's extremely profitable. Maybe they're profitable at 5-minute trading, which 99% of people are not. They all lose. Or maybe you found someone that you just like their style and you want to copy that style. Now, what you can do with that style, for example, my style, you take my style, you say, this guy trades like a tortoise and he trades on a 4 hour chart, and I like the style and I like the support and resistance and I like the price action system, so I'm going to follow that system. But you might want to tweak it slightly. You might want to add 1 or 2 things into it, or take 1 or 2 things out of it that make you feel better or suit you better in your trading day. There's nothing wrong with doing that, as long as you have some kind of approach to a system that's going to give you a probability trade, high probability trade, because that's what trading is about. Because trading is a 50-50 game, and at the end of the day, what you're looking for is a high probability trade. All trading is, if you look at charts, is a bunch of buyers and a bunch of sellers, making it a 50-50 game. It's all squiggly lines. But what you're looking for on those candles, squiggly lines, tails, straight lines, support and resistance, price action systems, all you're looking for is probability. And what you're doing is you're taking what happened in the past, what probably will happen in the future, and taking a trade. That's as simple as it gets, guys. You don't have a crystal ball. I don't know anyone who can predict the future properly. There are a few people who say they can, but can they? So at the end of the day, what you have to do is you have to basically look at the probability and say, this might happen again in the future. And you'll agree with me that that's a 50-50 game. A 50% chance it's going to work or it's not going to work. Now, the idea is knowing this, knowing that you got a 50% chance. Knowing this and understanding this and not pushing against it all the time and thinking that you're somehow going to have this immense win rate, which is meaningless anyway, because win rates don't make you money, then you one step ahead, because now you understand that you've got a chance of losing. Now you've got it in your head that, you know what, I'm going to pay for a trade and there's a good chance I'm going to lose that trade. Now you decide, look, I've got a $100,000 account, a $10,000 account, a $5,000 account, doesn't matter what size your account is. Just take your account, and I'm going to use 100,000 as a round figure because it's easy to work with. And now you say, okay, each trade that I take, I'm going to risk 1% of my account, which is $1,000, right? Then you're going to take that $1,000, you're going to risk it on a trade. So you're going to go into the trade, and the first thing you're going to do is look at where your invalidation area is going to be. Stop loss, area of invalidation, an area where you think if the price hits that area, my trade is no longer a valid trade. In fact, it's gone. That's where you work out how much it'll cost from the cost price to that area. How much is $1,000? That's how many contracts you buy. Don't ask me how many contracts to take on any given trade or how many contracts per trade to take. You work that out against your risk. So you've worked out $1,000 risk. Now you work out how many contracts you take, and then you make sure that that trade can make you a bigger profit than it will make you a loss. So if it's going to make you $1,000 loss, now you're paying $1,000 for this trade because you're writing that off. You're saying, I'm paying $1,000 for this trade. Now, psychologically, you need to make $1,500 or $2,000 on that trade for it to be worthwhile. Because if you're going to win 5, you want to win $2,000 on those 5. And if you're going to lose 5, you only want to lose $1,000 on those 5. That's it. That's the business plan. So now you are risking the same amount every single trade. Don't change the amount on every trade, the same amount on every single trade. Think of it this way. If you take 10 trades, you're only risking a total of 10% of your overall account. The 10% risk on all your trades. The chances of you losing all 10 trades in a row are just gargantuanly, it's insane. You shouldn't lose 10 trades in a row. But if you do, hey, these things happen, eh? But okay, here we go, guys. Now, the second part of the plan. The second part is to approach the psychology with strength and understanding that you're going to lose. And if it goes into a loss, do not start panicking. Do not start moving that stop loss out or trying to average down or hedge your bets, because that will always end in tears every single time. You'll get away with it a couple of times, and then it's going to hurt you. It will hurt you. It will hit you big. What normally happens with win rates is the guys win 9 trades in a row and they take $10 each off wins off those 9 trades. And on the 10th trade that they lose $1,000. In other words, they lose 90% of the money. Not profitable. Big loss. Big loss. What you do then is now you understand that you can take a loss. If it goes down to your loss, let it take the loss, let it go away. Walk away, take a deep breath, go on to the next trade. Easy stuff. But if it goes into a win and it starts going up towards $1,000, which would have been the same as your loss, then take your stop loss and move it up to break even or even into a $500 profit, because then you know you're not losing anything. Now you're not paying for that trade anymore. That trade is now effectively free. And understand this, because a lot of guys say to me, but Rob, I was $1,000 in profit. It goes back to break even. I've lost $1,000. No, you haven't lost. You haven't lost anything because you haven't won anything yet. You're still in the trade. It's funny how the psychology thinks. If you go into a loss and you average down on a loss, that's okay. We're happy with that. We'll do that. But when we go into a win and we want to average up or we want to move the stop loss up and something goes wrong, I know we don't want to do that. No, we're losing money. That's the psychology, guys. Don't do that. I know a lot of you will see it go $500 into profit, and the first thing you're going to want to do is you're going to want to take that profit because a profit's a profit, right? No, it isn't. That's the point. You're going to sit with a whole load of small little profits and big losses, and that's what you don't want. You want small losses and big wins. That's the point, guys. So now you've got to follow that win up. When it reaches what you would have determined is probably your target, what you do then is you move your stop loss right up against the target, right up behind it. If it comes back and takes it out, you make target. If it doesn't come back and take it out, guess what? You make more money. And that's as simple as the business plan gets. The psychology of it is teaching your brain, there's fear receptors, because we've all got these fear receptors, teaching your brain to somehow switch off from that fear. So when you go into loss, that's one type of fear. But you know what's a worse type of fear? Is when you're going to profit. So scared of losing that. It's unbelievable. And you know what the worst feeling is than taking a stop loss? Than getting taken out. You get taken out a stop loss. Your brain kind of understands that you had that stop loss there, and your brain kind of understands that you were supposed to lose that money. But you know what your brain does to you when it goes into a profit and you get out early and then it goes all the way to your target? That's a far, far, far worse feeling. Believe me, that's a far worse feeling than if you're just taking your stop loss and gotten out of the trade. That's it. That's the simple trading system. Watch the next video on Monday, which is going to be all about short selling. We're going to talk a little bit about short selling. I'm going to show you guys what short selling is all about, because some guys actually don't know what short selling is and how you can do it. So I'm going to put a video out about that, and then we'll be live again next week. On the Tuesday and the Thursday. There was a lot of elections this week in the USA. I hope you guys enjoyed voting. I hope it all worked out for you guys, and I hope you're all happy. Guys, do come back. Till the next video. Thanks for watching. Cheers and bye.